Hey everyone! Are you a rideshare driver in New Zealand or thinking about joining the hustle? I'm here to answer all the questions that might be running in your mind related to taxation for your rideshare business. I hope I will be able to cover all the relevant points. This video will be based on points related to taxation for rideshare drivers. So let us grab a coffee and get into it. First point that we are going to cover is mileage expense. So basically, the IRD allows you to claim mileage expense for any business related travel using your vehicle. Business travel includes meetings, deliveries, site visits, and rides, but not your daily travel for daily commute. IRD specifies some rates every year around May, depending on the type of vehicle being used. For example, for a hybrid car, the rate for 2024 for the first 14,000 km is $1.04 and 21 cents for the rest kilometers. Here is how it works. That means if you drive 15,000 km for business, you can claim $14,770 as a deduction. That is 14,000 into 1.04 and rest 1,000 km into 0.21. There is an important note. If we are claiming mileage expense, we cannot claim some expenses as we have to offset them. These are fuel expenses, insurance, repairs and maintenance costs, depreciation on motor vehicle, REGO or COF expense. So while calculating your tax, you can check which method is more beneficial for you. For all our clients, we calculate claimable expenses from both methods and choose the one that gives higher expenses because higher expenses means lower tax. So additionally, we would need to keep some records for claiming mileage expense, that is the track of the business related kilometers. So you have got two options. You can either write everything down old school style in a logbook, or you can use an app like Logmate to track your kilometers automatically. Moreover, the amount spent on Logmate subscription or to purchase a logbook is also claimable. We would need to track our business trips for 90 days. Sounds like a blast, right? But here is the good part. Once we have done that, we calculate the percentage of business use, and guess what? We can use that percentage for 2 whole years. But note one thing, you can only use this percentage until your driving ratio changes by more than 20%. If it does well, back to the pavilion, you will need to start tracking again. Coming to my second point, that is a bank account. Open a separate bank account just for your rideshare earnings and expenses. That's a game changer. You might be wondering why. So basically, it makes it super easy to track your income, expenses, and profits. With a separate bank account, you can instantly see how much you are really making. Just for example, if you receive $20,000 from Uber and spend $8,000 from the same bank account, the $12,000 left in your account shows your profit. So far, you can easily see how your business is doing. It's that simple. And make sure you link your card to this bank account. If you don't, you will end up using your other card for expenses, as this will cause confusion and make it hard to manage your money. Plus, during tax time, you won't have to go through your personal transactions. Everything is neatly in one place. Also, it helps not to skip any business-related transaction. Keeping it simple, you don't need to open an extra bank account. Rather, you can also open a sub-account. Let us now discuss the third point, the car loan. You probably thought it was just a painful monthly reminder of your debt, right? It is, but it's also a way to reduce taxes. You can claim these three things from that: interest, loan fees, admin fees. Note one thing, you cannot claim the principal amount being paid against the loan. We can only claim the interest portion for the year in the profit and loss account. For example, if you have paid interest of $4,000 during the year and your business percent is 100%, so you will be able to claim complete $4,000. The fourth point would be home garage expense. If you park your rideshare vehicle in your home garage, You can claim a part of your expenses, no matter if your property is rented or owned. The percentage is based on how much of your home is used for business purpose. So, how does it work? You can claim a percentage of rent or mortgage, interest, and rates based on the size of the space used of your house. Example calculation. If your garage is 10% of your total home space and your weekly rent is $200, then you can claim 10% of $200, which is $20 per week. So the next time you park your car, think about how much that garage is really worth. Expenses related to phone. Your phone is your office on wheels, and luckily, phone and data expenses are tax deductible. If purchased a phone under $1,000, you can claim it fully in the same year. But if it is over $1,000, it will be depreciated at 67% over the years. For example, if you buy a phone for $850 in November, you can claim the full amount as a business expense. But if the phone costs $2,000, you can only claim part of it for this year as depreciation. The claimable amount would be $558, calculated as $2,000 into 67% into 5 by 12, and the remaining amount will be claimed over the next few years as depreciation. Mobile data cost that is related to the phone being used for business purpose is also claimable expense. So now comes the turn for the expenses related to treat your car like a celebrity bride. Keeping your car clean and well maintained isn't just good for tips or just about impressing your passengers. It's also a tax deduction. You can claim expenses for car washes and cleaning, grooming and detailing, accessories like seat covers, floor mats, and air fresheners, window tinting to keep things cool and stylish, safety gadgets like dash cams or rear cameras. Why does it matter? Because you are using these things to make your rideshare car look great and stay safe. So the costs related to that are considered as business expenses. Example, you spend $30 a week on car cleaning and $200 on a new dash cam. $30 into 52 weeks, which is $1,560 for cleaning. At the $200 dash cam, you can claim $1,760 as an expense. Basically, happy customers create lasting success. So if you buy anything to keep your passengers happy and entertained, you can claim it. This includes things like bottled water, mints, hand sanitizers, wet wipes, or even upgrading your car's stereo system to improve their ride experience. Now we will talk about expenses related to licensing. So, if you had to spend money on getting your passenger endorsement or transport service license or go through a background check, that's a claimable expense. These are the things you need to legally drive, and since they are directly related to your business, you can include them while calculating your tax. But before you get too excited, think about getting your personal driving license. That's on you. That's considered a personal expense because learning how to drive is just a basic life skill, not something directly related to your business. Basically, anything you are required to do or pay for in order to operate as a rideshare driver can be claimed. Fuel and fuel receipts, the never-ending love story. Let's talk about fuel, because as rideshare drivers, we live at petrol stations. If you are full-time, you probably fill up twice a week. That's a ton of receipts, and you are supposed to keep them for 7 years. It's almost like the car eats them, and we are left some faded slips. But there is a smarter way. Create an online account with fuel companies like BP, Z Energy, Caltex, and Mobil. The question is why? Because digital receipts don't fade or get eaten by your car seat. When you have an online account, every time you fill up, the receipt is stored digitally in one place. You can check your invoices whenever you want. All you have to do is sign up for an online account. Next time you visit the petrol station, just ask them how to get started. And let's be real, who wants to argue with IRD over a receipt from 2018 that looks like it survived a flood? Lose a receipt, lose a deduction. If you pay for something from your bank account or card, you only need to keep receipts for expenses over $50. But if you pay in cash, that's a different story. You need to keep every single receipt, no matter how small the amount is. Why? Because there is no record of cash payments and the tax office loves proof. For example, if you pay $60 at the fuel station with your card, keep that receipt. Spend $10 for cleaning with cash, you would need to keep that too. A receipt is important because without it, how would you know if someone genuinely made that expense or just made up a story? Imagine your friend claims they spent $1,900 on a phone purchase but forgot the receipt. Without proof, it's hard to tell if they actually bought a phone or just treated themselves to a fancy lunch. The easiest way to maintain record is to keep a folder or click a picture of every receipt and save it on your phone. These were the major expenses, but there are also minor ones that can be claimed. As a rideshare driver, you can also claim smaller costs like parking fees, tolls, cleaning supplies, and even stationery for record keeping, as each little drop together makes a sea. Hence, every little expense adds up and helps reduce your tax bill. And there you have it. I hope this video has given you some clarity on how to manage your expenses and maximize your tax deductions as a rideshare driver in New Zealand. Remember, staying organized and keeping track of your record is key, whether it's mileage, loan interest, or even keeping your car spotless. Every little bit counts. If you have any questions or need help with any of the points we discussed, feel free to drop a comment below. Don't forget to like this video and subscribe for more tips and updates on rideshare business. Thanks for watching, and I will catch you in the next one. Until then, drive safe and hustle smart. Until then, drive safe and hustle smart.